Hi, everybody. Dave Rauch here, CEO of Protect Building Services, and welcome to the Maintenance Manager. And today we have as amazing special guest, Kevin Davis from Kevin Davis Insurance Company, located here in Los Angeles. And Kevin is amazing because he's very active in CAI. And you also have, I think I saw 40,000 HOA clients,
Community association client across the country.
which is a lot. That's a lot. And Kevin was also at the Legal and Insurance Conference last week. We touched base there. And so we're going to talk today about insurance, which is something that I don't understand a lot about, but I know Kevin does. And so we both have a lot to learn today, and I'm looking forward to the conversation.
Me too.
So, Kevin, can you start with telling us a little bit about your involvement with CAI? You said you were involved, you got less involved, but now you're back again.
Well, it's interesting. My first CAI conference, so CAI had these conferences every year, was 1984. I was a young person and I knew insurance, but I didn't know anything about condominiums. So I go to these conferences and all of a sudden I get overwhelmed by how specific community associations are in terms of how they operate, in terms of their background, in terms of they have to take care of financial. They have to make sure they enforce the rules. Okay, they have to do
Landscape,
legal,
legal.
and the most important thing, they have to maintain the association.
Yes.
Nothing more important than maintenance of the association. So as an insurance specialist, I'm looking at how those two dovetail. How if you're looking at exposure, you're looking at the most important things that community association has to take care of is the property. Okay? And if there's a claim, number one, you diminish the value of my property. So instead of my property being worth $500,000, now it's only worth $450,000. I'm going to hold you personally responsible for it. These are things I've been learning and thinking about. And okay, I have to make sure we have the coverage to protect these board members. So what I did was be able to put together a specialized policy that responds to a community association board of directors when they're sued for failure to maintain a common area, okay, fail to pass special assessments, okay, fail to enforce the rules. Because that's the three jobs that every board member has to do. So our policy, what we did, looked at it and said, okay, what we're going to do is protect them from these causes of action.
This is the D&O policy?
These are the D&O policies.
Okay.
The Directors and Officers Liability Policy, which is the most important policy there is for community association. No policy more important.
And let's dig into that. But first, can you tell us all the different types of insurance policies that an HOA would have? It has workers' comp for other workers.
Exactly.
It has GL.
GL, an umbrella policy.
Umbrella,
They have a crime insurance policy.
Oh, right.
Okay?
Right.
People forget about that because it ended up happening, they found out the hard way that all of a sudden they make a phone call to the property manager and say, you know what? I still haven't received the money for the repairs that were done. Okay, I've been asking you over and over again. You should have repainted the entire unit, and you haven't paid me yet. What's going on? The manager will say, well, guess what? You sent me a fax and said to sent it to you, $10,000, and you gave me a new bank and routing number. Yes, you know what that happened?
Theft.
Cybercrime.
Yes.
You know, it happens so often.
How often?
Oh,
I mean, we've heard about it.
Okay. It's probably the number one crime loss that we see today.
So it's not just like private companies. It's not just governments. We've heard governments and even libraries getting hit by cybercrime. So HOAs are getting hit by cybercrime?
You get hit by cybercrime. We all get hit by cybercrime. How many times you get on your phone and they said, guess what? Your Netflix account has been canceled. Those are cyber crimes. What they want you to do is click on it. And once they click on it, they have all your information. But the easiest way to do it is by pretending they're somebody who you think they are and they're not.
Sure.
Okay? And all they do is say one thing, here's my new bank and routing number. And you're stuck.
Gotcha.
You put your bank and routing number in there and it's over. So when we talk about insurance, it covers a lot. It covers a lot of different areas. Right. But the key thing that these boards have to understand, they have three jobs. Force the rules, maintain the association, and collect assessments and collect the money, the budgeting process.
Right.
So as long as they do those three things, they should be in pretty good shape.
Gotcha. Which leads us back to your
Sure.
saying
Yeah.
from last week that all roads lead to D&O.
All of them need to do, exactly. All roads.
Love that saying.
We talk about fair to maintain insurance right now. Right now, the biggest problem that we're seeing, they talked about, is not having enough insurance.
Really?
Because insurance is too expensive now. So people are choosing to say, listen, the value of my condo associations is $60 million, but I can't get $60 million in coverage. So I'm going to get $10 million in coverage. Okay.
And that, when I learned last week that there's 300 and some billion dollars of uninsured property.
Yes.
And so, am I right hearing you saying that some HOAs are going without insurance?
They're going without insurance.
No insurance.
No insurance.
Even if it's in their documents that they have to have it?
They are figuring out ways to get around it. Okay.
Yeah.
They'll say, okay, each individual unit owner has to buy insurance.
Right. Yeah.
Okay.
We learned
Because
that.
again, the problem is they can't afford it.
Mhm.
Okay. You have situations where last year we paid $40,000. This year it's $400,000.
Right.
Okay. And the reason why it's $400,000, why? Because they're in the area where there's wind. Okay. Fire damage.
Hail.
There's hail. Water damage. We look at your association and there's just leaks. You're never going to burn down because there's leaks everywhere.
Yeah.
So you have associations out there that are just hard to insure.
Mm.
And we're in a time, okay, and this is the toughest time for all of us because we are noticing our insurance rates are getting higher and higher and higher.
Mm-hmm.
My homeowner is getting higher. My auto is getting higher. And the reason why is this. For years, insurance companies were so competitive and they kind of did something dumb. So you get a carrier, some insurance provider will come in and say, guess what? I'm going to charge you $1,000 for your insurance.
Mm-hmm.
So you get another one come in and says, okay, I'm going to charge you $990 for insurance.
Uh-huh.
And then somebody charge you $880 for insurance. And then somebody charge you $800 for insurance. Then they'll say, oh, I can't go any lower than that. 800 is the lowest you go. But it should be at 1,000. So now all of a sudden you get a 5% rate increase, but you still should be at 1,000. Now you're at 885.
Right.
Okay. The rate always should have been at 1,000. It never was at 1,000. So if you keep dropping that rate and dropping the rate, then all of a sudden you look one day and go, guess what?
Not
We're
making
losing money.
Yeah.
And they've been losing money year in and year out.
Insurance carriers.
Insurance carrier has been
Yeah,
losing it.
yeah.
They've been losing money. And the reason why, because they always have to say, 10% not gonna make that much of a difference. I can set it at $1,000. I can give you a break. It could be $950 or $925 because 10% doesn't matter.
Mhm.
But over the years, 10%, 10%, 10%, 3%, 4%.
So
That's the issue.
So there's that. And then what I learned is there's a lot of hurricanes
Yeah.
that have been killing carriers. And then, of course, the wildfires in California, which must have been really bad
Yeah.
because everybody's always talking about the wildfires.
Mm-hmm.
And then there's always the water damage. And then the other thing is that the stock market is bad. So the economy itself, with interest rates up, insurance carriers also invest a lot of their money in the market, so they're getting killed in the market too,
Yeah.
right? Am
Yeah.
I right on that? I heard that, but
Yes, but again, the key thing is that the claims have exceeded everything else. We're looking at it.
right.
And one thing we need to talk about too is inflation. I mean,
Right, right,
inflation is a huge problem right now.
Absolutely.
First of all, I can't hire anybody to repair or replace anything
Right.
because they're not available or they charge too much money.
Well, you haven't heard about us then.
Yeah, but again, most people, yes, it is difficult to get people at a
Sure.
what they used to.
Sure.
They used to pay. Your people probably there, but you probably get a little bit. You
No,
charge a little bit more money. than you did before.
Labor,
Yes, labor costs have
crazy
increased. Okay.
increases.
But just to buy refrigerators and stoves and to replace the things, right?
Yeah.
But the big thing is this: your insurance for your home. Let's say you had a $500,000 home, okay, and 10 years ago you said, okay, to replace a $500,000 home is $350,000. So you have a policy for $350,000,
Mm-hmm.
and it's been $350,000 for the past 10 years,
Right.
And it's still $350,000,
Right.
But how much it costs to replace it today?
Yeah, property values have just,
Yeah.
since COVID,
Yeah.
property values have doubled.
Yeah.
And tripled in some markets, like here in Los Angeles. Property values, you pay $1.5 million for a tiny little home.
But it's not the value so much as the cost to repair and replace it.
Gotcha.
So in other words, that you have a $500,000 home. You say it costs $350,000 to replace it. Now you have $1 million home. Doesn't mean it'll cost you $1 million to replace it. but it's going to cost you a lot more than 350 to replace it.
Right.
But your values are still low. So your value should probably be from 350 to 650 or 750 replace it.
Gotcha.
That's why your rates are going up.
I got
The
you.
number one reason why your rates are going up because you were underinsured.
Yep.
You're underinsured.
And there's one other thing that is cost carriers, and it was Surfside. I mean, well, no, Champlain Tower South in Surfside, Florida, because that was $2 billion.
Yeah.
And I think what that did is, and you tell us, it was kind of a wake-up call that, hey, we can't handle many of these billion-dollar claims happening every year. So I think the insurance companies kind of followed the lead of Fannie Mae, Freddie Mac, and said, hey, association, you're going to have to maintain these communities correctly.
This is what happened on that from an insurance point of view. We see balconies collapse, okay? We see, stairs falling over. We've never seen a situation you had 100 people die at one time.
Or a building collapse.
Yeah. But yes, the building collapse, killing that 100 people.
Yeah.
And from an insurance point of view, we say, wow. I mean, we didn't think that was possible.
Yeah.
And so all of a sudden when you see it, what do we do about it? Because the 100 people dying in there is something that blew us away more than anything else.
It's existential.
Yeah. I mean,
I think for boards too.
Yeah.
I mean, a board member before was like, hey, if I never maintain the community and it falls apart, what the heck?
Exactly.
But now it's like, I could kill people.
What's the damage? In other words, what's the damage if I don't reserve properly? Okay.
Yeah.
You're mad at me. They're mad at me because I didn't reserve it properly. Big deal. Okay.
Yeah, right.
Now we know that it is a big deal. And that would change everything. Now, still people don't understand it. So from an insurance point of view, we say, guess what? We need more information from you in order to insure your condominium. I might need a reserve study. I might need to look at your budget. I might look at your reserves. I need more information to make sure your unit, your associate is worth insuring. And we're doing that more and more. We're doing it a lot in the wildfire areas. The wildfire areas is really tough because that we see what can happen and instantly. And we see what the hurricane can do and the floods can do instantly. So we want to make sure that you have the proper protections available there to make sure that if there is a fire or a flood or a hurricane, that we're not going to lose everything.
Gotcha. I have a question for you. There's the things that you can't control, hurricanes, wildfires that get out of control, hail. But things you can control are like water damage. And water damage, from what I've learned, is a big insurance claim problem. So you can control that through roof maintenance, through proper maintenance of the community and things like that. So
communication. If you're going to go away, let them know so that if there's leaks coming in there, you can let somebody know. Usually what happens when leaks start, nobody's there, and leaks continue and continue to go down, and you can't figure out where the leak's at. Then all of a sudden, you have a huge loss. And when from an insurance point of view, what we do is that, okay, well, if you have a water loss, we're going to put a $10,000 deductible or a $100,000 deductible, depending on your building. So what we do is say, we're going to force you to take better job of your association.
Okay. And that's by the increased deductible.
Yes.
And from the carrier, increased premiums, right?
The increased premium. And we'll give you a list of recommendations that what you should do is make sure you have water hoses, that you change them periodically.
Right.
We know what's going to happen. And if you listen to us, you will reduce your premium. Okay.
Right.
If you listen to us, you can have your premiums reduced. Okay. And your deductibles will be reduced. But what happens right now, it's kind of late in the game because right now nobody's listening to us and we're not making money. So we're going to have we put together these rules that nobody can follow.
Okay. And but I do now understand though that the insurance industry, the insurance carriers industry is kind of like the tip of the sword. I heard this story last week at the conference that all these hurricanes came through Florida and they ripped off the awnings that all these associations and homeowners had put up, awnings on their pools in various places for shade. And there was so much loss of awnings that the carriers said, no more.
No more awnings.
We're not going to cover awnings. And so it's almost like the insurance companies are really in control of what a lot of these HOAs do.
Yeah.
And I hadn't realized that before.
We're seeing so many different things. Assault and battery is becoming a problem. We happen to live in a world, a 50-50 world, where we don't like the other half. And the associations They don't like each other. And so we're looking at it and go, okay, we're seeing so many fights in these. Should we have an assault and battery exclusion?
Are we really?
Oh yeah. Oh yeah.
That's crazy.
Here's a perfect.
Well, I heard about a manager got shot in South Carolina
this is
last year.
But this is an easier one, okay? You put a sign up, okay? You could put a Black Lives Matter sign or MAGA win sign, okay? You make them like one or the other, right? So you have people pull them up. You put razor blades on the bottom of them. Yeah.
Wow.
Yeah. Okay. Because we tired of you pulling up our sign, put razor blades on.
Oh my goodness.
Yeah. So again, people don't like each other. I mean, these are associations.
Yeah.
And
it's a microcosm of society at large.
But the problem though is COVID was the main culprit of these things.
Ah.
Because what happened, we used to do is we get up 8, 9 o'clock, 8 o'clock in the morning, we go to work. We come home 4 or 5 o'clock, it's dark. We go watch Netflix, we eat dinner, watch Netflix, life goes on. But now 2 o'clock in the afternoon, what are we doing? We're sitting out in our computers, we're looking outside the window, and guess what we're doing? We're seeing something we don't like, okay? Yeah. Or we're hearing something we don't want to hear. And so what we do is we complain and go, I can't believe it. Yeah. I'm looking out that window and in the document says there's no signs allowed. And guess what they say? It's not a sign, it's a banner.
Huh.
Okay, what do you mean?
Oh,
so now you have to define what a sign is,
How interesting.
Yeah, so, and then that's when the battles start happening. No, it's a sign, it's a banner. And then start fighting. And it's not physical fighting. It is now all of a sudden there's a claim against the board because the board is not enforcing the rules. Remember, number one thing the board has to do is enforce the rules, maintain the association, like assessments.
Let me get your take on a similar situation. I call it the broken condo business model, which is where in Champlain Towers is a perfect example. The board of directors was never given a manual, maintenance plan on how to maintain that high rise when the developer built it in 81. So they're going along, everything's fine. 10 years, 15 years later, they got these problems with the spalling concrete. The salt water has hit the rebar, it's expanding, spalling the concrete. And they get an estimate of, I think it was $3 million was their first estimate. And the board is going, we're not going to spend $3 million to fix this. We don't have that money, and I certainly can't increase assessments on my neighbors and myself, because that's a significant amount of money, and they weren't directed towards a loan or something else. So anyhow, the $3 million turned into $9 million, turned into 16 million, and so the problem, in my opinion, is the boards are not forced to act.
Yes.
They just sat there and they didn't know what to do. And you can't get them to get educated, right? You can't get them to go to a CAI conference to get education. And so what are you going to do? Yeah. So the industry, obviously through Fannie Mae and the insurance industry and CAI, are having to force boards to do things like look at California 326, the deck law, perfect example, forcing them to do inspections. So I just would love your take on that the fact that boards, there's no one person in charge of the maintenance of all these buildings.
The problem is, again, I served on a board. I lived in a condo about 30-something years ago, and I served on the board. Because I want to get a better understanding of what it was like being on the board of directors of a condominium. The first thing I learned going to a board meeting is that they didn't care about maintaining the association, collecting assessments, enforcing the rules. As long as the assessments stayed the same, everybody was happy. Yeah. If we go in and say, we need to increase assessments a little bit because guess what? Inflation. It costs more money to do things than it did before. No, we made a promise not to raise the assessments. Okay, you don't raise assessments, okay. But then you spend more time talking about, what's on Netflix? Where are you watching this? Can you believe
Did you see that guy yesterday?
Yeah, did you see that? And so all of a sudden, they close the meeting without really doing the main thing they need to do, was to make sure that association maintained. And I go to my first annual meeting, and I'm at the annual meeting, and all I do is get yelled at for an hour and a half about how come you didn't get the new pool furniture you promised to get out of the pool? How come you didn't repair the balconies that should have been repaired? And all of a sudden you get yelled at, and all of a sudden I say, I'm done. I'm not serving the board anymore. So I served 1 year on the board of directors, and that was it for me. And I learned that, you live in the community association, it's not like it's a business.
Right.
Okay. If it's a business and they think of it as a business,
right.
If they think of the fact, if I have 10 units and they work for $100,000 a piece, I got $1 million asset that I have to take care of. Well,
Absolutely.
they don't look at it that way. They look at it as, again, like we said, it's fun and we're having a good time and we do certain things. They need to treat it as a business. By treating it as a business, they can avoid all the things you just mentioned.
How do we do that?
Now,
How do we get them to look at this as a business, which is what it is?
yeah, they have to understand that once they serve on a board, they have a fiduciary responsibility. They have to act in the best interest of association without any conflict of interest. That is the number one thing they have to do. They have to enforce the rules, okay? Make sure to take care of the assessments and maintain the association. If they do those three things, guess what? The association will be more effective.
Yep.
My job, your job, CI's job, to keep preaching that over and over again so they will listen.
Yeah.
These are the three things you have to do. It's a business. Treat it as a business. If you have 10 units, 100,000, you have $1 million corporation you have to run. And once you say you have $1 million corporation you have to run, guess what? It may sink in that, wow, I do have a fiduciary responsibility to do it.
Yeah.
And if I'm sued, I could be held personally liable.
Yep.
And that's the thing that we say over and over and over again.
Yep. And as you know, CAI just did this report, which is best practice on maintenance.
Yes.
Have you seen this yet?
I've seen it. Yeah.
Yeah.
I've seen
And
it. Yeah.
and this obviously now gives good guidance to boards that don't know what maintenance is or how to do it. And I don't know your thoughts on this. As an industry, I think we're making good progress.
We need to make better progress because what happens is that anytime there's a maintenance issue, anytime there's a damage to the balconies or damage to the railings that we see, or failure to maintain the cleaning, trim the trees, they all equal some type of litigation.
Yep.
But at trimming the trees, you didn't see the stop sign. So somebody goes to the stop sign and somebody's hurt. Maintenance is so important. That's where the damage is. Most people don't understand, though, that maintenance is not an insurance policy. It's not a first party coverage. They think just because the railing or the balcony needs to be repaired, they submit it for a claim.
Right.
We see the claim when they don't repair it and somebody gets hurt.
Does that happen often?
What's that?
When they submit a claim for a repair?
Oh, sure. Yeah.
Really?
Yeah, because they don't know. They in their mind, all of a sudden the balcony needs repair. We need to repair. So let's get the insurance carrier so they can repair it. And we said no. I mean, it's not. It's a maintenance. We say over and over again, there's a difference between maintenance. It's not a maintenance. We don't maintain. All we're doing is do one thing. There's certain things we will cover if there's a loss, okay? But most of the things that we worry about for maintenance is when you are sued for the failure to maintain. That is a problem. You didn't maintain it, so you're sued. It's because somebody was damaged.
Back to the D&O.
Back to the well, it's more. It's called liability.
Oh, okay.
Because it could be liability. It could be a property damage claim. Because you didn't maintain the roof was leaking, and guess what? I have a $300,000 painting. Okay. Notice everybody has $300,000 paintings when the roof is leaking. 2 days ago, it was just a regular painting. Okay. But when it gets damaged, it's expensive.
I bet you have a million great stories.
Way too many of them.
Yeah, I bet you have.
Way too many. When we're doing this for a while, sometimes your mouth just drops open because we're paying for that. How much is that going to be worth?
Yeah.
So, if we have to summarize it, what we're saying is this. If boards of directors treat what they're doing as a business, understanding it is a multi-million-dollar corporation they're in charge of, they have a responsibility to maintain it, collect the assessments, enforce the documents. Guess what's going to happen? You won't be sued.
Yeah.
And when something does happen, something occur, you may be sued, but there's no damages because you did your job properly. How was you harmed? You weren't harmed because you did your job. If the balcony is collapsing, if the railing is collapsing, you fix it. You maintain it. You take care of it. If the water's leaking, you maintain it. And if you do that, you will have a pretty good, decent community association where the values will increase. So you're looking at a $500,000 unit, now it's going to be worth $750,000, where the association next door is worth $450,000. That's my advice.
And that's success.
That's success as a condominium.
Well, Kevin, thank you so much for your time today.
Sure.
Thank you for all you've done for the industry and for CAI too. I mean, you're amazing.
Thanks a lot.
Thank you very much.
Glad to be here. Okay, take care.
And thank you, everybody, and stay safe.